Yeah, hey everyone. Good morning. I think my voice is audible. Uh, yeah, we can wait for a minute or two so that everybody can join in and then we'll start. Yeah, good morning. Good morning. Uh, Good morning, everyone. Thanks for joining on a Saturday. We'll wait for a minute more so that everybody can join and then we'll start. Okay, then let's start. Uh, Firstly, thanks for joining on a Saturday morning. And the primary aim for this webinar is to analyze the Q1 FY26 quarterly earnings. Now, Q2 FY26 earnings are yet to begin in, let's say, it will begin in the first week of the October. So, in 3 weeks' time, you will be getting Q2 results. But before that, it is essential to analyze what happened in Q1, which are the strong pockets of the market, and the beauty of the current market. For most of us, it is a frustrating, consolidating market. But right now, we have ample opportunities in investing or trading in those stocks that have done well quarterly in Q1 results and still trading at decent valuation levels. So, in this webinar, the primary agenda is first we'll do the broader analysis of Q1 earnings. Then we will look at, so from top to down we will go. So first will be the broader analysis of Q1 earnings. Then we will be doing sector and index analysis of Q1 earnings, and then we'll go to stocks level. And for that, I'll show you some screens that you can use to filter stocks for trading or investing. So based on your style of putting money into stock market, if you are, let's say, swing trader, and mixing fundamentals and technicals to find trading opportunities, then I'll show some screens for that. If you are an investor, then I'll show some screens for that as well. So if you want to invest in companies that have not done well even after reporting strong numbers, and then in the end we'll have a Q&A session where you can ask anything about the Q1 FY26 result season or current market situation in general, or else if you have any doubts regarding the platform sharply. Right, so the first part is the macro analysis of the earnings. Now, as you can check here, what has happened is till now 4,440 companies. So, two companies reported the numbers yesterday. So, till now 4,440 companies have reported their numbers. And if you look at the sales growth and PAT growth, that is top line and bottom line, what has happened is only the median growth of all the companies is only 8.54% year on year. So even on a year on year basis, we are not able to grow the top line by more than 10%. Only single digit growth is there, right? So median sales growth of all this 4,438 companies is 8.5% year on year. And if you look at quarterly, the scenario is very bad because only the growth is minus 1.86%. So we have degrown on a quarterly time frame. So in QOQ, median growth is minus 1.86, and in YOY, median sales growth is 8.54%. And if you will look at the same numbers for a PAT growth, then we can see that the PAT growth is slightly better than top line. So bottom line has grown slightly better. So it is 10, nearly 10.5%. So 10.34% year on year median PAT growth. And then on QOQ again, we have earnings as flat as it can be, right? So only 1.42% QOQ growth we have seen. And if we dig slightly deeper, then if we filter those stocks that reported a growth, so sales growth greater than zero in year on year time frame, that is 1480. That means only 33% of the companies grew their sales in a year on year time frame. So only one in three companies was able to grow year on year in the top line, and about 30% of the company, so 1345 companies grew their PAT on a year on year time frame. PAT growth greater than zero. And if we look at QOQ, then we have only 972 companies, that is less than 25% of the companies. So let's only one in four companies was able to grow their sales on a quarterly time frame. And the same number, around 25% of the companies, so 1140 companies grew their PAT on a QOQ basis. So if we look at the macro level, the data is not very encouraging, right? Because companies are struggling to grow their sales on a year on year and even on a quarter on quarter basis compared to the valuation. Because right now markets are not cheaply valued, right? And I'll show you that as well, what's happening in the pockets of the market. Because you may argue that for some companies Q4 is the best quarter, so you cannot compare QOQ. That's why we will be primarily focusing on YOY time frame. And then you have this sales growth greater than 10%. If you look at, if you apply that filter, then only 999 companies were able to grow their sales more than 10% year on year, and only 500 odd companies were able to grow their sales more than 10% QOQ. That means only one in 10 companies was able to grow the sales, right? So that is not a very good number again. And for, if we apply the same filter for the PAT growth, then again we can see that 26% of the companies grow their PAT year on year, and 22% of the companies grow their PAT quarter on quarter. So, and now one interesting observation here is companies struggled to grow their top line, but managed to grow their bottom line. So as you can see, top line more than 10% sales growth is only 507 companies, and bottom line more than 10% of PAT growth, we have almost double the companies, right? So somehow company do, either companies had operating leverage, or they do margin expansion, or they cut the cost, or do something else, but able to grow their PAT compared to sales, right? And due to this weakish number, we have not so strong numbers. So due to this weak numbers, what has happened is market is not moving in any direction. So the first quarter of FY26 is April, May, and June. So since July, since the uh, company started reporting their Q1 numbers, Nifty total market index has not moved anywhere. And you can do the same analysis for any type of index. All the index are consolidating and not moving in either direction, because what's happening is the growth is not absolute negative. On year time frame, we were able to grow the businesses by 8.5, 9.5% in that range. So growth is not absolute zero. So when price falls, then investors come and buy some. Then when price moves up, due to weak numbers and not so strong growth, we see profit booking. So we are in a consolidation mode. As you can see, that market is consolidating right now, right? So this is the macro level analysis of Q1 FY26 earnings. Now let's look at the index level data, and for that we will jump into our quarterly results tracker tool. Here it is. So now, as you can see, we have 4,440 companies, as I mentioned, to reported the numbers yesterday. Now, have these numbers in mind before we do the analysis. So, median sales growth is around 8.5%. Median PAT growth is around 10.5%. So, if any sector or index or industry group or industry were able to grow the number, their sales and profit numbers more than this. So, if the numbers are higher than 8.5 on the top line front and 10.5 on the bottom line front, then that pocket of the market did well relatively. Not absolutely, because absolutely you may say that those companies which reported 20% median growth. Those sectors are did well. But relatively, if we see higher number than this two, right, and then it has done relatively well. So now what we will do is we will look at the indexes. So first we'll look at the index level. So first is Nifty 50. Median growth is 8.17 and median PAT growth is 9.42. So again, nothing extraordinary here. And if you look at quarter on quarter, degrowth as flat as the results can be. Right. So nothing exciting in Nifty 50. If you look at Nifty 100, again, same scenario. So 8.91, so around 9% sales growth, and 9.88%, so around 10% PAT growth in the median level. So all the 100 companies have reported the numbers. And if you look at some of the companies that did well, and if you look at only Nifty 100 companies, then what you can do is just click on this view all results, and then you have all Nifty 100 companies, and then you can filter out strong names, right? So Apollo Hospital did relatively well than if any other company. So BPCL top line growth was not there, but bottom line was strong. Then you can go to next page. You can check for the double digit growth on a year on year. So Info Edge, the parent company of Naukri.com, also did well, double digit growth. Titan, a large company in the market cap wise, so it also did well. So you can dig deep into stock level as well, but right now we are primarily focusing on the index. So Nifty 100, some companies did well, but overall at the median level, there is not something extraordinary. Right now, let's look at Nifty 500. Now, again, median sales growth 9%, PAT growth 10%, and on quarter basis, again, companies are struggling. Right now, let's look at mid cap companies. So let's look at Midcap 100. Now, if you see that sales growth is in line around 9.5%, but PAT growth is only 5.76% right now, right? And that's not good, because overall market has grown at around 10.5. We have half the median profit growth in the mid cap stocks. And if you look at the mid cap index, so I can show you that as well. Midcap 100 index, you can look at the fundamentals of the index as well, right? So the PE ratio here is 31.73, and the growth that we had was almost 5%. So will you invest in a company that is growing at 5% and then pay 31 P ratio, so 31 times price to earnings, right? So this index is very richly valued at the moment compared to other ones. But for the mid cap companies, if we come back to the result tracker tab, instead in mid cap companies failed to grow their numbers, right? So mid cap stocks struggled a lot in Q1, right? And now if you look at small cap companies, so we can look at small cap 250, then median sales growth is in line and median profit growth is 10.95, so slightly higher than the nearer to the 11% growth. So small cap did well relatively compared to the mid cap names. And if we also look at the small cap 250 index and check at what valuation it is trading, then we will get some relative idea as well. So again, it is at 32.72p, but at least it is growing at 11%. So similar valuation compared to mid cap stocks, but slightly or way better PAT growth, right? So we'll come back to again result analysis tab, and now let's look at the micro cap companies. Now this is Nifty Micro Cap 250 index, and don't assume that this index has very, like, let's say 5 crore, 10 crore market cap companies. This, if you look at the constituents of the index, these are the larger companies, so above 1,000 crore market cap companies, but they are still in the micro cap index, right? So If you look at the micro cap, then we have some interesting data point that we have 7.57% sales growth. So sales growth is lesser than the overall market. But if you look at median PAT growth, it is 14.30%. So it is firmly outperforming the overall broader market in terms of profit growth, right? And then you can again jump to this detailed view section and then filter those companies which reported strong numbers. Inox Green, strong numbers. Then Borosil Limited, strong numbers. Zaggle, strong numbers. Valuation is very high again here. And yeah, one more thing that I would like to clarify in the middle of the session is that nothing that we are going to discuss today is a buy or sell recommendation, right? So don't blindly invest in whatever we discuss. Do your own analysis. This is just a starting point for you guys, right? So we will be discussing stocks and sectors, but just don't blindly invest, right? So you can either, what you can do is you can go one by one and take a pen and paper and write down the names of the stocks, or else you can create a simple screener and I'll show you that. But we have one idea that micro cap in the Nifty micro cap, if we go to the summary, we have very strong PAT growth, right? So micro cap did well. Then let's look at Nifty next 50, and again next 50 has also done well. So 10.23% year on year growth and 11.22% year on year. This is sales and this is profit. So slightly higher than the broader market. So next 50 also relatively did well. And if you look at these, that 41 out of the this 50 names grew their sales year on year, right? So more than 80% of the companies and more than 50% of the companies grew their sales in QOQ time frame, right? So slightly relatively better number. So this is the index level analysis. From this analysis, what we have concluded so far is micro cap has done well, small cap has done well, mid cap has struggled, and large cap stocks are in line. So nothing very extraordinary that's happening in the large cap numbers. Right, so that's our analysis from the broader market indices. Now we can analyze the sectoral indices. So if we look at Nifty IT, 7.59, 9.454, nothing great. If we look at Nifty Bank, then we have 7.14% growth year on year in sales terms, and in PAT growth we have minus 8.97%. So you will feel that banks have done really, really bad, right? But that's not the case. Actually, public sector banks have done well compared to private sector banks, and I can show you that. So if I look at Nifty private bank index, then you have this minus 8.97 number, and median sales growth. So top line is 6.29, bottom line in YOY time frame is minus 8.97. And if we look at PSU banks, then we have much more better growth compared to private sector. We have bottom line so is 12.38%, which is higher than the median of the market, right? So PSU banks have done very well compared to private sector banks. Then we can look at more indices. So sectoral indices, if you look at Nifty Auto, very good PAT growth, right? So 7.9% sales growth, which is not so great, lesser than median, but in terms of PAT, we are at 13.84%. And if we look at the constituents of the index, most of them did well, right? So on top of that, the auto OEM companies did really well. So your Bajaj and TVS and also Ashok Leyland, decentish growth. Top line is 9.5, bottom line is 19.4, right? And then other companies is Hero MotoCorp. Top line is not there, but bottom line growth is strong. Bharat Forge, then Bosch, we have very high bottom line growth. Again, valuation can be high. Bajaj Auto, as I mentioned, 10% sales growth. PAT growth is around 13.8% on YoY, and also grew QOQ as well. Now, Exide Industry is a very interesting company that is going through a huge expansion right now. We will discuss that on some other day. But Of the look at the other constituents, then we have Aisha Motors did well, right? 14% sales, around 10% PAT. Maruti decentish sales growth, nothing much in the PAT front. And then TVS, as I mentioned, 18.4% sales, and then 34.7% PAT growth on a year-on-year time frame. And Mahindra continues to do well, right? So very strong sales growth and very strong PAT growth, more than 20%. And that's why if you look at the stock of it, stock price, it has done really well. So Nifty Auto did well. If we now look at the PSE companies, then not very good picture right now at the moment. As you can see, 4% year-on-year sales growth, minus 5.56% QOQ sales median growth, and then on the PAT front, as flat as it can be on year-on-year time frame and negative on QOQ time frame. So CPSE companies, no company did really well here, barring one or two. So shipbuilding companies, some of them did well. This NBCC also did well, but most of the names, if you see, they are struggling to grow. So for CPSC, so public sector enterprises, nothing great there. If you look at Nifty consumption, then sales growth is there. So 10.07, so 10% median sales growth on year time frame. But at the PAT front, we are struggling again. And there are 30 companies. We can look at them one by one. So again, we have this Titans and Apollo Hospital. So some of the companies that did well, Hero, Trent continues to do well, Bajaj Auto, and so on. Right. Then next index would be FMCG, and FMCG front again below par numbers, 7.31% year-on-year median growth and 5% year-on-year median PAT growth. So again, nothing special in the FMCG front. Many of us are, many analysts are also feeling that FMCG will grow, but till now it has not done anything. Now with GST tax, GST rationalization and everything, maybe FMCG will grow. We will see in the coming quarters, right? Now, if we look at Nifty Financial Services, very strong numbers here. So median top line growth is 12.68%, and median bottom line growth is 16.02%. And we have 20 companies. So finance compared to private financial services companies, this can be a gold financial services company or housing financial services companies, but financial services did way better than what banks did, right? So here we have this Muthoot Finance, 44% growth on a YOY time frame on top line and 14% on bottom line. Then if we check PAT, again very strong growth numbers, right? Again the same for PFC, double digit growth in year-on-year time frame. Then Cholamandalam Investment and Finance, very strong numbers again, right? 25% top line, 20% bottom line. Then what other stocks? Yeah, Shriram Finance, very strong top line growth is there. Bajaj Finserv, very decentish numbers, so 12.6% top line, 26% bottom line growth is there. Right, so as you can see, Bajaj Finance also did well. Insurance companies are doing well. So SBI Life did well. Then private banks are struggling. In private banks, ICICI Bank is the one name that is shining compared to other names. Then AMC companies are doing well. If you check all AMC companies that are doing well, so be it HDFC AMC or Shriram AMC, and we have Nippon India AMC, all AMCs did well. Again, insurance companies, so we looked at SBI Life and ICICI Lombard General Insurance also did well. Right, so financial services, very good numbers. Then let's look at healthcare. Again, very strong numbers because 11.19% and 14.53%. And we can look at constituents. So what we have here is Max Healthcare, strong numbers, Apollo Hospital, strong numbers. But and you can go on and on, right? But you get the gist that this is how you can find the stronger pockets of the market, right? So you can continue to look at Nifty Metal, very strong year-on-year growth. top line struggled, bottom line very strong growth. And then you can look at more granular level as well. So let's say a space that we repeatedly highlighted is cement, right? So in cement, median sales growth is 1.68, median PAT growth is 100%, right? So something is happening here. You should check our Twitter handle if you are not following. What's happening here is margins have bottomed out. So companies have started to increase the prices, and uh, now what's happening is that margins are on the upward trajectory. So in the coming quarters, you may see that cement stocks are doing well. And if you look at the index, I can show you that custom index. So just give a moment. Yeah, if we look at the index at how the index has moved. So in a, let's say right now weekly it is going flat, but it has already moved up compared to March 25 lows, right? So and P ratio right now will look high because earnings just started to move up, so but still this a space where you can look at in constituent level details as well. So if you look at the constituents and then look at the chart of them, cement stocks have been doing really really well. So uh, if you zoom out a bit, many of them has moved up a lot, right? So this has moved up. This Grasim not so much. Ambuja moved up, now has been correcting. Sri Cement also not much. JK Cement did really well. It's a strong up move and then some correction. Dalmia Bharat, very interesting looking chart, right? So it's consolidating. So maybe about 25.50 we have a breakout, but again very strong up move. So cement is a space where you can look into. So this is how you are supposed to analyze first broader market index, then very specific niche index that we have. So let's say if you want to look at the agrochemicals, this is another very strong space where numbers are good. So 25.97% median sales growth, 40% year on year PAT growth. And this is primarily because of the government subsidy on some category of the fertilizers, right? So fertilizers companies did really well. If you want to look at the details, we have the details here. So Zestar Much Corp did well. Almost all of the most of the names did well, right? So Bharat Rasayan, good top line growth. Then we have Hidanba, good top line growth. We have this India Pesticide, Bayer Corp, right? So most of the companies have been doing well. If you look at the Sumitomo, then UPL, very strong bottom line growth. Make Money Organics, a very strong top line and bottom line. And NSCL Industries, very high growth, right? So this is how you can filter out strong pockets of the market. Now let's move to the third part of this webinar, and that is either you can do all this manually or else you can create screens, right? So smarter way of doing it is to create useful screens. And I'll again come back to this tab. uh, yeah. Yeah, so I talked about chemicals and let's say agrochem stocks, but I was on the other tab. But basically, strong numbers here, right? So, yeah, let's move to the screen part now. This is another thing that you can do. Now, before we move to the screen part, this tool is very useful in the upcoming result tracker season as well, right? So once the result starts coming in, what happens is you can, look at the companies that reported results today, yesterday, and so on. So as you can see, these companies reported the numbers yesterday. Today, no results till now. But once the earning season starts, you will get day-wise data, and then every day you can come to this tool and then spend 5-10 minutes, and you will get the daily update on which stocks reported strong quarterly numbers. So in 3 weeks time, I personally feel that this tool again will be very useful in analyzing Q2 numbers. Right, now let's move to the screens. Right, so there are few screens that I have created that we can do we can use to do some sort of analysis. So first screen that I would like to highlight is no negative growth on year-on-year and QOQ time frame. So what I am doing right now is I have put four conditions: that sales growth year-on-year should be greater than zero, sales growth quarter on quarter should be greater than zero, profit growth year on year should be greater than zero, and profit growth quarter on quarter should be greater than zero. So both in annual and quarterly time frame, what we want is positive growth in both top line and bottom line part. And I have put the market cap greater than 1,000 crores so that we can filter smaller, like we can avoid smaller companies, focus only on the larger companies. But you can change this to 500 crore as well. And then and again only companies that reported Q1 numbers, right? So I'll click on run, and we have 318 stocks, right? So if you are let's say a pure technical guy, then this 318 stocks can be your universe to filter out stronger opportunities. Now you can add some technical conditions here as well, and I'll show you how you can do it. And even if you are a fundamental analyst, this 300 stocks have done relatively well, because this you can and also increase the threshold, because you won't be able to uh, do or analyze all 380 stocks. So we should increase the threshold, and for that we have this another screen that we have made. Now as you can see, market cap above 500 crore. Now we have increased the threshold to 10% for year on year time frame. So as you can see, we have now sales growth year on year and profit growth year on year. It should be more than 10%, and sales growth QOQ and profit growth QOQ should be greater than 0%. So what we are expecting is quarterly sequentially there should be some growth. So from Q4 FY25 to Q1 FY26, there should be positive growth. But on year time frame, we have at least 10% growth. And the technical condition that I was talking about is that we also, let's say we don't want to focus on those companies that have fulfilled this criteria, but somehow the price has fallen. Now, this can happen primarily in those companies where valuations were very high. So, one example I can give you is the transformer companies. So, transformer companies are growing really well. So, if you look at the growth numbers, it's really, really well. But as they have run up so far, so we have more than 70, 80, 100% price up moves in last a year and a half. So now what's happening is most of them are trading at triple digit P. Now at more than 100 P, even promoters have started selling. So the price has fallen for these stocks, but we want to focus only on those stocks whose prices has not fallen more than 15% from their 52-week high. So the last condition does that the close price should be greater than 85% of the 52-week high price. So basically, stock should be above this threshold, right? And now, if you run this screen, you only have 92 stocks that qualifies for this, right? And let's say if you are a technical analyst, then what you can simply do is for many platforms you have to download this list and upload to TradingView and then do the analysis. But on Sharply you can directly do that, right? So no need to upload anything, and at a time you have access to 9 charts together, right? So now if you start checking, Bajaj Finance just broke out, right? It had also had a gap filling setup here. So very good earnings numbers. Mahindra and Mahindra, as I mentioned, price has been on the up move since long time, right? So very good chart. But what you can do here is filter those stocks who are consolidating right now. So Pidilite is one example, right? It is consolidating around this level. If you click here, you can look at the chart in, let's say, in a bigger view, right? And as you can see, it is consolidating near this level. So you can, that's a 1320-25 level is somewhat that if it crosses, then it might go up. And there has been a long consolidation, right, since May. So more than to May, June, August, September, and September. So more than 5-6 months. Right. So Pidilite, an interesting example that you have found. You can simply put the price alert here. Again, not a buy or sell recommendation. Then HDFC AMC. Again, we have seen some consolidation. So you can put an alert there. You can move down, and this Apollo Hospitals making cup and handle type of a pattern here, right? So at 700, 920, you can have another price alert there. Muthoot Finance has run up a lot. Torrent Pharmaceutical consolidating. So either it touches the base where you can buy. And so you can do this analysis, technical chart analysis, right on your screener, right? So this is one part. Now let's say you are more on the fundamental side. Then what you can do is you can just remove this condition. You can also increase the threshold. So let's say from this 10 to let's do 15. And on sales growth on quarterly part, I also will put 5 and 5, right? So now if we run the screener, we will have how many companies? 124 companies, right? So now let's say you are a fundamental guy. Then what you can do is you can export this list, and you can open it. Now to show that, I have to uh, yeah, just give me a moment. I'll share that part. Yeah. Test screen. Yeah. So yeah, I think it's visible now. So now if you check here, what's happening is we have those companies in which the sales growth and PAT growth on year time frame is higher than you know on the PAT front we have at least 5% threshold. And if you change this, then now you have this three scores as well, that for all the companies you have value score, momentum score, and quality score. You can use them, or else what you can do is you can add more columns to it, right? And I'll show you how you can do that as well. So yeah, what we can do is we can add industry group and industry as a column. Now again, we can download the data, and this we select everything, and then go to this industry set, expand. Now we have industry wise data of which companies did well. So if you look at advertising and media agency, then Signpost is a company that is doing really well. And if you look at aerospace and defense, then we have the Sika Interplanet Systems. I don't know what the company does, but for AMCs, we have two names, HDFC and NAM India, which shown 15% growth on year and 5% growth on quarter, both in top line and bottom line. So now this is a more smarter way compared to looking at each sector and then finding its stock and then doing analysis. So for auto components and equipments, we have this company HBL Power, then this names that Digvi, Torque, Transfer Systems, Frontier Springs, Automobile Corporations of Goa, and then Manon Bearing, then Biotech, this compressor pumps. So in pumps part, we have in this category, this industry, we have three companies. Then in tech, we have these names, right? Then in edible oil, gems and jewelry sector did really, really well, as I mentioned earlier. So we have many names from that part, right? So from Timex to Sky Gold to Goldiam, Senco, Titan, Kalyan, all did really well. Then in hospitals, as I mentioned, did really well. Hotels, we have good results. Chalet Hotels, very, very good results, but other companies as well. So if you are a fundamental guy, now you have this Excel sheet where you can, filter out those stocks that have done well. Right, and now another screener that I would like to show. So till now, what we have done is we have just looked at the numbers from the standalone part, right? That companies that has reported higher growth than X percentage. But let's say we want to look at the relative outperformance at the fundamental level. And what I mean is that companies that grew higher than their median industry growth. Right. So for that, we have this screen above the median screen. In this, what we are doing is first we are focusing only on those industries which showed higher, uh, greater than zero median growth, both on sales and profit front in a year-on-year time frame. So industries sales growth year on year should be greater than zero. Median profit growth of the industry should be greater than zero on a year on year time frame. So first in these two steps we are filtering out all those industry that showed negative growth, and then from these industries what we are doing is we are focusing on those companies that grew higher than the median. Because sometimes what happens is if we just put a condition that sales growth year on year should be greater than 10%, and let's say a company with sales growth 12% year on year gets filtered, and you will feel that okay, it's higher than the median number, 12% is good. But if the industry has grown at, let's say, 15%, let's say if we take the example of agrochemicals or cement stock, and then growth is 10-12%, then other companies have grown at much higher speed. So this is a slightly advanced version of the screening that you can do. So here we have sales growth is greater than this median numbers of the industry. Again, same goes for the profit growth. Then market cap should be above 1000 crore. Again, we can reduce this to 500 crore. And close is greater than 85% of the 52 guys. So price should not have fallen more than 15%. So here we are mixing both fundamentals, and we are using this advanced functions. Median is a function where you can take median of the any metric across any section that you want. So if you look at the sales growth is higher than sales growth of the sector, then you can do that as well. But we are at the industry level, we are at more granular level. And now what you have here is 156 companies. So this is a very, very strong list, right? And if you want the Excel sheet of this list, you can just type in the comment that you want the list. I'll share the link in the description, or else what I'll do is I'll publish the screens on Sharply, so you can directly come to the website, and it's totally free. So you won't need to pay anything for this, right? So this is a list of very strong companies that have grown uh, at a higher rate compared to the median of the respective industries, right? And they have still not fallen by more than 50% from their 52-week high. And again, we can look at the charts of the stocks, and you will find mostly the strong names here, right? So it will take a few seconds to load. Yeah, so as we already discussed Bajaj, but again, ICICI Bank, strong numbers, Mahindra and Mahindra, HDFC Life Insurance is then this Geo Financial Services, trending or it's trading near its support level, so maybe bounces back. Then Titan, good numbers with that. TVS Motor already very steep run up. Bajaj Holding. So if you are a swing trader kind of a guy, you can just simply uh, take this 156 stocks, mark the price levels that where these companies become attractive on the price point of view. If you are a fundamental investor, you can remove this condition, take the list, export this into Excel, and then, as I mentioned, have this kind of analysis, where you analyze sector wise filter out good companies. So if you want the Excel, you can comment, or else I'll just publish these screens. And where you will be able to find, if you go to screener, you will be able to find. And if you go to this screener section, below we have published screens here. So if you go to fundamentals, you will find some of the stocks, some of the screens that I have mentioned here. And if I have not published this under mostly under this fundamental sections part, so fundamental screeners, you will be able to find all these screens, right? And then another one last screener that I would like to show you is of earning surprise. So here what we do is we feel that analysts know, or analysts do much more deeper analysis compared to us, right, when it comes to companies. And then based on their analysis, they gives their EPS or growth forecast. Now let's say we want to filter out those companies that has surpassed their estimates, those companies which surprised even analysts, right? So whatever analyst have, let's say analyst has said that this company's EPS will be 100 rupees. Now we want to filter those companies which reported EPS of 105 or more. So these companies have even surpassed the analyst estimates, and due to which what can happen is analysts also revise their earnings forecast. So let's say as an analyst, I predicted that the EPS of this company should be 100 rupees this quarter. Now its EPS is, let's say, 120. So whatever assumptions that I made, or whatever my projections were, they were below the actual growth of the company. So I'll revise it, and I'll say that from next quarter onwards, the EPS can be in the range of 150 to 120, right? So with these two conditions, we are doing that. So EPS surprise, so the this metric is basically the difference of actual earnings versus estimated earnings of the analyst is should be greater than 5%, and earnings upgrade should be also there. So analyst must have upgraded their earning forecast in the last 3 months. Here what we basically check is, we take the EPS forecast 3 months ago, and we take the EPS forecast of now, and then we take the difference. So that difference should be of at least 5%, right? And now what you see here is, these are the companies that surprised even the analysts, right? So we have 26 such names here, right? And you can also remove this condition, because let's say analyst might not upgrade their earnings estimates, but still companies that surprise the analyst estimates. Then we have how many companies? We have 156 names here. So as you can see, for Reliance, primary duration paint cells, so Reliance is not good example. But for Maruti, whatever analyst has estimated, the company outperformed, or did well by more than 20%. For Bajaj Finserv, the company EPS surprise was 12.7. For Hindustan Aeronautics, it is 21.30. So these are the list of companies that even surpass the analyst estimates. So these are 4 5 screens that we discussed, right? And using that, you can do analysis based on your investing style. So I think we are 3 minutes above the stipulated time frame, but that's it for today's uh, webinar. Now, if you have any questions, you can ask. So what I'll do is, I'll stop sharing and then share again. I'll share this. Yeah. So whatever questions you have, just give me a moment, guys. Yeah. So whatever questions, will this earning inbuilt factor in earnings growth factor? Jinal, can you explain a bit? Okay. I didn't get the question. Can you share the screeners for subscribers? Yeah, Ajay, I'll, as I mentioned, I'll share my screen again. I think it's blank. Mm, but as will be available to even the free subscribers or the paid ones. So that won't be the issue. Another question is, will this earning? So, general, if you can explain your question in more detail, then I'll be able to answer that. Any more questions you have for this session or markets or anything that you want to ask? You can ask, or else we can end this in 1 or 2 more minutes. So, yeah, screen you have prepared for sorting out the top line. So, for earnings growth, general. Uh, what you mean by since you're prepared for sorting out the top line, bottom line versus median growth? So in median growth, we are also considering the median of the industry as well. So as I gave the example that, let's say if a company has grown by 12-13% and the median growth of the industry is, let's say, 15 or 20%, then it is not a good thing to have, right? So that's what I was mentioning about that. You know when you take the industry part as well in your analysis, then you have a better understanding of how the industry as a whole has done compared to just looking at the standalone numbers, right? Just putting 12% or 10% greater than 10% number. If you compare with median, then you have more granular level analysis. And same goes for the other side as well. Let's say if you have some stock that grew at 5% year on year, and then the industry growth, median growth of the industry is minus 5%, then that 5% is also a really good number, right? So that is the difference between just looking at the earnings growth and then comparing it with the median. I think that's it. We don't have any more questions, and as I mentioned, I'll share all the screens with you guys, so you can just come to this screener section. I'll highlight once again, so you can come to this screener section here, click here, and then simply just come down to scroll to this part, and in fundamental screeners you will find all the screens listed, right? So I'll publish all this in an that's a 15-20 minutes, and then you will have all the screeners. I think that's it for today. If you have any more questions, what you can simply do is you can go to this community part, and then ask your questions here. So whatever questions you have, you can do that. So this is the Sharply community. So you can come here. Here there are multiple discussions are going on, right? So if you have any questions about tool, about anything, you can ask, and then we'll get it done. So I think that's it for today. Thanks for joining, everyone. Have a nice weekend.